Hi guys, glad to have you here. My name's Austin, and for a minute, I want you guys to imagine that you're in a room with 5 other people. Now, these are people that you've never met before. They all come from different economic backgrounds. They all do different things for their line of work, and they're all of a different age. If we were to dive into each person's financial situation to see where they're at as far as their savings go, we could find that only 2 of the 6 of you in this room have at least $1,000 saved for an emergency fund, and only 1 of you has at least $5,000 saved for retirement. The other 3 in the room would have little to no savings whatsoever. Now, if we were to go around to these last 3 people and to ask them why they don't save any or hardly any money, the most common answer that we would get is that they're simply living paycheck to paycheck, and there's not enough money left over after all of their necessary expenses to be able to save anything in the end. Now, I understand this isn't very practical in the sense that most people probably aren't going around asking complete strangers exactly how much money they're making and how much money they're saving, but it does paint an accurate picture of what the average savings looks like within the US. So if you guys find yourself in a situation where you're not saving as much money as you'd like to from month to month, or maybe you are in the boat where you're living paycheck to paycheck after all of your expenses, I'm going to be discussing a couple of ideas that come to building your mentality and your habits around the idea of saving more money, as well as sharing 4 specific tips with you guys that can help you begin a savings plan. And if you guys stick around to the end of the video, I will be sharing a free resource that I've built out to be able to help you guys more in detail with that savings plan going forward. When it comes to the discussion of saving money, you really have 2 options that you can choose to focus on. On one hand, you can focus on cutting your costs, and on the other hand, you can focus on increasing your income. When we look at cutting our costs, usually that's pretty painless and pretty immediate to be able to reduce certain expenses such as subscriptions, going out to eat, and traveling. When we look at making a greater income, usually that takes a lot more time to develop a skill set or become more marketable to your employer or to your clients if you're self-employed, to show that your compensation should be higher than it currently is for your time and your efforts. Another point that a lot of people fail to consider is the tax effects of these 2 activities. Let's say, for example, that your goal is to save an extra $100 every month to your savings account. When we look at cost cutting, it's very simple. If you're able to reduce your costs by $100, that's simply $100 that you're able to hold on to and put towards your savings. However, looking on the side of making more income, the story is not quite so simple. Let's say that you have a job that pays you $20 an hour. So for every 5 hours that you work, or 5 additional hours, you would make an extra $100. But because of taxes, what would actually hit your bank account from that point, let's say your tax rate is around 20%, then you'd only be left with $80. So in this scenario, in order to take home for your savings $100, you would actually need to work 6.25 hours, which would pay you $125. Then after 20% tax is taken out, you would then be left with $100 that you're able to save. Now, the last point that I'd like to make of why I think that people really should be focused on reducing their expenses as opposed to just simply making more money is due to a concept called the lifestyle creep. And what this concept simply says is that regardless of what income level someone's making, that they're typically matching their lifestyle right up to that point where they find themselves in a situation where they are living paycheck to paycheck. So for example, if we have someone who's making $40,000 a year and they see that their expenses are matching pretty closely right at that $40,000 mark, they're someone who's caught in the lifestyle creep. If we go forward a couple years and say that that person has gone from $40,000 to making $80,000 a year, if they're still caught within that trap, we can see that maybe they've gotten a nicer car, a nicer house, they're buying nicer clothes, they're going out to eat at fancier restaurants, and all of a sudden, where they were before living a $40,000 lifestyle, they've now enhanced their lifestyle to once again match the level of income that they have, and once again they're living paycheck to paycheck just at a higher degree. In order to avoid falling into this trap, I think that it's very important for people to develop those habits and that mentality of being more of a saver rather than a spender, so that as your income does increase over the years, you're not continually matching your expenses up to that level, but you're able to live within your means so that you do have that buffer between what you make and what you spend, so that you have more to save and more to invest going forward. Before we get into the tips that I want to share with you today, there is an important conversation that you should have with yourself before we get into these things, and that is determining your why of savings. Especially if you're someone who tends to be a big spender, you need to find something that's motivating and compelling for you to be able to work towards and to stay on track in the long run. because savings is very much a disciplined game, and there's going to be a number of things that you'll want to purchase or to deviate from your plan in the meantime. So what you want in the future needs to be more important than what you want in that moment. Maybe for you, that might be traveling more. Maybe you want to get out of debt or get a down payment for a nice home. Everyone's motive is a little bit different, but you just need to simply determine that it's important enough for you to keep you on track. If you need to take a moment to pause this video, do so, and then we'll get into our tips. Tip number 1 is to simply go into your online bank and download your bank statements for the past 2 months. It's important that you go through your bank statements because this has a record of all of your transactions that have come in and out of your bank. And as you go through these and each line item categorize which expense these things fall into, this will give you a good snapshot of where to start with your savings plan. I personally do this from time to time where I'll just review and see where I am with my savings plan. And even though I'm naturally a big saver, I'm always surprised to find that there are some subscriptions that have been going on for multiple months that I usually don't use anymore, or I've been eating out more than I thought that I actually really was. And so it's a good way for me to be able to quickly cancel those subscriptions or cut back on that eating to be able to save even $100 or $200 every month by just simply going through all of my bank statements. Tip number 2, pay yourself first. This one's very important, especially if you're someone who does find yourself living paycheck to paycheck. There's a lot of other bills that you have that are coming in that are non-negotiable that you have to pay for housing, for food, for travel and transportation. And one of the other things that should be handled first and foremost is paying yourself. This is one that a lot of people neglect, and they try to squeeze it in at the end of the month after all of the other expenses have gone out, and they always find themselves empty-handed at the end of the month. As far as what amount to pay yourself goes, I would highly recommend paying yourself no less than 10% of what you bring in every month, whether you need to set up an automatic transfer or withdrawal from your account towards your savings, or you're able to manually do that on your own. One way or another, you should be saving some of your income so that you aren't living paycheck to paycheck. Tip number 3, this is to create a specified financial goal. You need to have a specified dollar amount for this goal, as well as a date tied to it in which you want to be able to have this accomplished. These two aspects will give you the foundation that you need in order to reverse engineer a goal and break it out month by month into an actionable savings plan. If you're unsure on what your financial goal should be, a couple good milestones to consider to start with is to first make sure that you do have a $1,000 emergency fund set in place. You can build up to 3 to 6 months of living expenses in your savings account, and make sure to pay off any high interest credit card debt that may have been built up. Let's run with that second idea and say that I have a goal to save 3 months of living expenses, and I want to do that in the period of the next 12 months. In order to do that, I need to figure out what my monthly living expenses are, and let's say that they come out to $2,000 a month. So I know that my specified dollar amount for those 3 months is going to be $6,000, and that I have a 12-month window in order to get that accomplished. Breaking that out month by month, I know that I need to save one way or another $500, whether that be cutting costs or figuring out how to make $500 after taxes. Once you've been able to determine what your goals are, what the amounts are, and the dates that you want to accomplish it, it's super important that you review your goals frequently to be able to measure your progress. Which is nice with numbers is that you're easily able to see if you're falling behind, if you're getting ahead on your goals, and to be able to make needed revisions as you go forward through these things. As you continue to review these goals, your chances of success are going to be a lot higher than if you just simply set these goals from the beginning and then you never review them in the future. Tip number 4 is to create a budget. When it comes to building out your own budget, it's important to understand that everybody thinks about money differently and everyone has their own way of managing money. One method that may work for me when it comes to budgeting may not work for you as well. Some that are pretty common that a lot of people use when it comes to this point is something called the 70-30 rule, in which 70% of someone's income is allocated to their living expenses, while 30% of it go towards savings and investments that they have. Another method that's popular for a lot of people, especially if you're someone who isn't always aware of how much money you're spending from month to month, is what's called the cash envelope system. And this is exactly what it sounds like, in which you're able to go to your bank, pull out the cash that you need, and be able to break it up between different envelopes, say rent, groceries, and entertainment, that you're able to put those into and that you're able to freely pull from throughout the month. And you know that if you go to any of these envelopes and there's no cash left in them, that you've run through your budget for that category for the month. It's important that you have some sort of a tool or a resource that you can use to not only build this budget, but refer to for accountability purposes and to measure your progress going forward. If you're somebody who tends to be a little more hands-off when it comes to this sort of a thing and you'd like things to be more automated, you can use something like a finance app. One that I use from time to time that's been useful is called the Mint app. This allows you to be able to make all these connections with your financial accounts and be able to build a budget within the app that can send you notifications to help you be more aware of where you are with your financial goals.
Now, if you happen to be someone who likes to be more hands-on when it comes to managing their finances, then I've included a free resource. It's in the link down below for you guys to a Google spreadsheet. It's a budget template that I've built out. So I'm going to walk through that and show you how it works. If we take a look at the budget template here, all you need to do in order to copy this is just select File, make a copy, and this will generate a new budget template for you. You can rename it whatever you would like. And then all we need to focus on initially is anything that's in green are going to be the manual inputs that we have into this spreadsheet. And you don't need to know a whole lot about Google Sheets in order to make this template work. The first thing that we're going to look at is this top left corner that talks about money allocation. This follows the 70-30 rule. And so right here I have input that this is going to split 70% of our income towards living expenses, 20% are actually going to go towards debts, and the other 10% goes towards any savings or investments. And you can change and adjust this if you think that you can live off of 50% and then invest the other amounts. You just need to make sure that the total in here adds up to 100%. Otherwise it will show this red section here. So now that we've adjusted it, now we can put more towards our debts or investments, but you can play around with these numbers, but we're going to stick with the 70 and 30% towards debts and savings. Now let's select the current month. Right now I'm filming this in October. There's a drop down menu here. You want to make sure that you're selected on the current month. So we're going to go down here towards October. That will update the formulas to pull from the correct month that we're going to be budgeting for. And we can scroll over to our October column up here, and we'll see that there's this section here. So anything that's in a darker green are going to be our planned budget. And then the section to the right that says October actual are going to be the amounts that at the end of the month we'll put in to compare how we did according to our budget. Let's say that you have a job that your take-home pay ends up being $2,000 a month. We'll keep it simple. And then you have other sources of income. Let's say you have a side hustle that brings in an additional $500 a month. So this will total down here in your total income column and say that you have $2,500 to work with here. Over here on the left, these are your indicators to show you how much you need to budget for each section. So we have 70% towards our living expenses. The amount that we have allowed to budget is $1,750. And as we go through here, so we'll say towards charity, we want to give $200. We're going to pay $500 to rent. Groceries are going to be $200. Phone will be $50. Gas $150. So on and so forth. And as you go through, you'll notice that these numbers on this amount left to budget under the section get lower and lower. So you can constantly see how much you have left to budget in the category of living expenses. And if you happen to over budget, let's say it says here we have $650 left and we put in $1,000. Now it says that we're over by $350. And on the spreadsheet, you'll notice that if anything is out of line, it will highlight it red. So you'll know if you're overspending, or when you get to the sections of debt and savings, if you aren't spending as much as you were planning, it will show red saying that you're not reaching your goal towards paying off any debts or saving money. But right here, so we can see that we overspent by $350, so we need to back that off. But you can go down here and then change the expenses to whatever you have. Right now, this includes up to any number of expenses up to 15 individual categories. And then down here in our debt, we see that we can allocate $500. Let's say that we have a car payment for $200. Student loans, we want to pay another $200, and we have $100 left. If we have medical bills or credit cards, let's say that we're paying off $100. And then same for savings, 10% is allocated. So let's say we have a savings account and we want to save $250 and follow that 10% rule of paying ourselves first. So we can see in this column, if we take a look at it, we have our total income and then our total expenses add up to the same amount. So right now we have every dollar budgeted. It's split between our living expenses, our debts, and our savings. Now, if we go through the actuals through here, we'll be able to, at the end of the month, match the income that we were going to make. This all looks good, but if we happen to make less than we planned, let's say $400 from our side hustle, then this will highlight red saying that we came short of our goal a little bit of making money. And then as we enter expenses, the same thing will happen. Let's say in our groceries, we ended up spending $250. This will highlight it and say that you went over budget by that amount in that area. And then under debt or savings, if we happen to pay our car payment, but let's say on our student loans, we only paid $150, then we fell a little short of that goal. And then same with savings. If we only save $200, it's going to fall short of that goal. So as you review, you can see what areas you may be coming short in, so it can help you focus on what you should be improving going forward, so you can reiterate this budget as you go along. And then down here, this will show your total spend, and this will highlight red as well if your total expenses exceed your total income. That's the essence of the budget. So if you guys happen to have any troubleshooting questions, any questions on how to use it, I will be adding to this resource in the future. This is kind of a simple outline. Feel free to download this and use this as a personal resource if you feel that it's useful for you guys.
Thank you guys so much if you've stuck to this point in the video. I know we've gone over some super exciting topics talking about budgeting and saving money. And let me know in the comments down below what you guys would like to learn going forward, as I'm here to help you guys out. Stay happy, stay humble, and I'll see you next time.